You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, the program where we break it all down on the futures options side of the fence. Maybe some metals, some rates, some energy, some equities, some ags. You never know what's going to make it onto the show. That's why you have to tune in every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. Reminding you folks out there, if you're just getting TWIFO, you're missing out on a whole bunch of other fun stuff on the networks. Make sure, A, you upgrade to the full network, and B, wherever you're listening to this, keep rating and reviewing. It really does help. We've seen just a huge influx of people who are new to these markets, which, again, no surprise, 2020 saw a huge onset of new participants in the options and, indeed, futures options markets. I need a place to turn, so keep rating and reviewing. It does help new folks continue to discover the program. Keep those questions coming, too. We do love to hear from all of you folks out there asking about how these reports work and all that. Like last week on the show, that's all fascinating stuff and important for you guys to go through here on the show. So keep those questions coming. We do love to hear from you guys. Let's see who we're hearing from on the old program today. First off, our old buddy, Mr. Sean Smith, usually beaming in from FTSE Russell Studios, is on a well-deserved vacation this week, but there's a lot of fun stuff popping off in the world of FTSE Russell. So by popular request, we have filling in on the FTSE Russell hot seat, our old friend, Mr. Rick Rosenthal, the Director of Business Development for all things FTSE Russell over there at the SIBO. Rick, welcome back to TWIFO, sir. It has been too long.
Hello, Mark, and thank you for that introduction. I want to thank our great partners at FTSE Russell for putting me on the FTSE Russell hot seat for today's broadcast. So thank you for having me, and thanks to FTSE Russell. Great to be here.
All right, and that's not enough Russell for you, listeners. We have a double dose of Russell. This time, more in the name variety. We have our old friend, Mr. Russell Rhoads, a.k.a. the once and future Dr. Vix, now holding court over there in Loyola by way of EQ Derivatives. Mr. Rhoads, welcome back to the CME Group hot seat, sir.
I am thrilled to be here. Can you hear me?
I can hear you. You sound good, sir.
Cool. I'm having all kinds of weird tech things going on over here. Good. You can hear me. I'm so enthusiastic. You could probably hear me from 20 miles away in suburban Chicago. I'm so fired up to be here and talk about the new FTSE Russell stuff.
All right. So let's get to it then. But first, we have to kick off the show the way we always do. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report. This is, of course, where we break down all the action on the underlying front, the futures front over there at CME Group this week. Pretty evenly distributed chart here, both to the upside and the downside. A lot of movers in both directions. So, Rick, I will give you pride of place. You haven't been on in a little bit. I'll let you choose where we begin our journey. Should we begin to the light side, a.k.a. the upside, or to the dark side, sir?
You know, Mark, today is a dark day. Market's moving lower. Let's go to the dark side.
It is indeed a dark day. A lot of blood red on the screen, even though it seems like maybe that worm may be turning a little bit. We'll see. Who knows what it will be even by the end of the day here. But to the dark side we go. First off, number 5 to the dark side, a name some of you may be familiar with out there these days. Yeah, it's Bitcoin. A pretty quiet week, net at least, since our last show for Bitcoin. Only off a paltry 3.25%. We see that swing minute by minute sometimes out there in Bitcoin land. By the way, it was number 3 in the other direction last week, up 9.6%. Number 4 is the old NASDAQ 100, off 3.6% here since our last show. Number 3, going out to the Ultra Bond land, almost 4.2% to the dark side. It was pretty much a similar amount in the same direction last week. It was number 4 to the dark side last week. Number 2, our old friend Nat Gas, talked about it last week. That was very much on the radar and in the headlines last week. Nat Gas retreating off some of those highs there, off 9.5% this week. It was number 5 in the other direction last week, up 7.6%. So you know it's a day that ends in Y. Nat Gas is going to be moving. That is the case yet again. Number 1 to the dark side. I wonder why. It's the Eurodollars. Off 14.25%. It was number 1 in the other direction last week, up 18.18%. So a lot of action going on out there. Before we get to that, let's get out now to the upside, aka the light side. Number 5 is Brent. Don't talk about Brent a lot, but it's been moving a bit of late, up 4.5% this week. Number 4, RBOB. I think you're getting the theme here, up 5% even. It was number 4 last week as well, up 9%. So it shows you how much more aggressive the upside was last week. But it's RBOB, number 4, 2 weeks in a row here. Number 3, good old lean hogs, up 5, almost 5.25%. It was number 2 to the upside last week, up 14.75%. So a good couple of weeks in the world of lean hogs. Number 2, soybean oil, up just a tick under 8%, 7.99%. That means number 1 with a bullet this week is copper, up 9, almost 9.25%. Copper has been on fire. I got a feeling we're beginning hanging out a little bit in the metals this week as well. Before we do all that fun stuff, let's also break down what's going on from a vol perspective, the top volatility movers and shakers over the past week over there at CME. And it's kind of interesting. Both the upside and the downside are kind of monopolized by one product category each. On the dark side, the downside, we have pretty much all palladium. Palladium is giving up the vol this week, pretty much 6.25% across the board in terms of the 30-day, the 60-day, and the 90-day contract. So vol coming in a wee bit over there in palladium. On the upside, the vol advancing side, it's kind of all Eurodollars, depending on where you're looking out there. 30-day, 60-day, kind of pick your poison across the broad spectrum of the Eurodollars. Either way, they're all up about 16% or so, maybe 15%. You get a little bit farther out there, but still a lot of upside from a vol perspective to be found in the Eurodollars. I got a feeling we're going to be hanging our hats out there as well. Well, because we got a double dose of Russell on the show today, let's start out in the land of equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, let's get to it in the land of equities. As Rick alluded to at the top of the show, a lot going on in the world of equities today. It started off with a little bit of red on the screen. Most of the major indices kind of selling off. And as the day progressed, it really exacerbated. NASDAQ was off over 3% at one point there. S&P was north of 2%. It seems like they're mitigating that a little bit now, but still, maybe the worm is turning yet again back to the downside there. But NASDAQ shy of 3% now, which is good to see. S&P off about 1.75%. Dow back off about 1.2%. So it seemed like maybe the worm was turning back to the upside. Maybe that was just the reprieve out there, because maybe things getting a little bit dark again. Things like the yields out there and maybe some lackluster earnings and maybe people getting spooked by what the Fed was saying, all that combining to perhaps weigh on the markets. I just like to say more sellers than buyers out there. But from a vol perspective, things have been moving quite a bit as well. Let's go out to RVX first, which is, of course, the VIX of the Russell 2000. Coming into showtime, it was at about a 36.5. It puts it up almost 4.25 points from our last show. If you've been watching RVX for a while, you know it's been glued north of 30. It can't really break 30. There's a lot of vol, obviously, to be found out there in small caps these days. VIX cash coming into showtime had drifted down to about 27.75. It was a lot higher than that earlier in the session. That puts it up about 5.5 points from where it was this time last week. So a lot more vol on the radar out there. VVIX, which is the volatility of all these vol products we're talking about here, that's pretty juicy as well, up about 124.25, puts it up about 3 points from last show. And Vol Q, aka the at-the-money vol of the NASDAQ, aka the newest addition to the vol trading suite over there at CME, is at about a 30.5. So that's up nearly 7 points from last week. Again, not surprising. NASDAQ has been leading the charge to the dark side most of the week here. So not surprising Vol Q getting a bit of a lift. That puts those spreads, that VIX to RVX, aka that small cap to large cap vol spread, at closing in on 9 points coming into showtime. That's about a little bit tighter, actually, than what it was this time last week. But again, these indices RVX is kind of staying glued above 30 and VIX is kind of swinging around. So that's kind of making that spread widen out and then contract and widen out and contract. So it's been certainly fascinating to watch. And VIX to Vol Q, which is, again, not exactly apples to apples, but still pretty close. It's right around 3 points, about 2.75 points. It puts it about a point wider than last show. But Rick, we have a lot to talk about here. One of the reasons Sean was adamant he wanted to have you on if he couldn't be on the show this week is because there's a lot of stuff coming on the horizon. In fact, coming up next week here in the land of all things FTSE Russell from an options perspective. So, Rick, why don't you catch our listeners up here on what you guys have up your sleeves for next week, sir?
Well, thank you. And Mark, this is nothing up our sleeve. It's well known. We're going to be launching a brand new mini Russell cash settled index option, ticker MRUT. And what makes this product so interesting, it is going to be a smaller notional contract. If you look at where the Russell was back in August to where it is today, it's 45% higher. So we're looking at a contract that has a notional value. The big contract has a notional value of about $227,000, which makes it a little pricey for a lot of participants. With this new product being 1/10 the notional size. So you look at the Russell 2000 index, 1/10 makes it more palatable. It's a $22,000 notional contract. So there's some interesting advantages when you're looking at a cash settled index option versus a comparable ETF option. A cash settled index option is simply, it's an index underlying. So at settlement, you're going to see either a credit or debit on your account versus worrying about, delivery of an ETF or assignment of an ETF. So there's no underlying delivery issue at all. It's a European style, which means you don't have to worry about early assignments. And finally, there's a 1256 contract. This is a tax code that gives a different tax treatment to cash settled index options. And the benefit there is it's a blended tax rate. It's 60% long-term, 40% short-term. So from a tax perspective, many participants don't even know that these cash-settled index options offer this tax benefit. So we're excited about having this mini product because there's been so much interest in the Russell 2000, number one. And number two, there's a very strong interest coming from the retail segment, as we've seen over the last year, tremendous growth in retail participation in the marketplace. So we anticipate after our launch on March 1st, we're going to have some eyeballs on this product. And on top of it, we've got a leading market maker, Belvedere, who is committed to make a competitive market. The exchange CBOE has put in some market maker incentives in place that will incent them to, quote, tight markets. And we've got 4 additional market makers that have committed to providing liquidity in this product. So we're very excited about not only the product, but the participants who are going to be involved, the commitment from FTSE Russell, the level of commitment from the exchange, and our new partner, Belvedere, to make this a successful new product.
I got to say, Rick, I don't think you could have better timing on this one. Just in the last couple of months, certainly since November, when Russell 2000 really started distancing himself from the pack of the other major equity indices, we've seen just this awakening of interest, whether it's from our hosts and contributors on the network, whether it's from our audience out there. Everyone is suddenly awakened to what's been going on out there in Russell 2000. We've had all of a sudden people coming in and talking about esoteric aspects of the Russell 2000 that in the past probably wouldn't even talk about this index, talking about the small 5 delta calls and what's been going on out there. I know even yesterday, again, Brian on our Options Playbook radio show did yet another small cap Russell 2000 spread. And he's not been one prone to talk about small caps a lot in the past. In the last couple of months, he's been talking about them quite a bit. So it does seem like the narrative, for obvious reasons, small caps are dramatically outperforming of late, but the narrative out there has really shifted. And on top of that, you're, of course, picking up the trend that everyone is really rallying with these days, Rick, which is everything small is big. Look at the success of the micro futures over there at CME. I mean, they've literally blown the doors off what they expected from a volume perspective. So it seems like, Rick, you have this kind of perfect storm of Russell 2000 really taking off towards the end of 2000 into 2021. You also have this just onslaught of new retail participants who are diving into the market, who are now all of a sudden awakening to what's going on out there in the Russell 2000. And on top of that, you have this new bite-sized type contract that seems tailor-made to meet the needs of that audience, Rick. So I think I'm going to go out on a limb and say I think you may have some action on this one, Rick.
Well, thank you. To add to the narrative, Mark, we've seen the Russell 2000 up until yesterday outperform all the other indexes. It was up 15% year to date. So let's give back, let's say 2%. It's still outperforming the S&P 500 by a landslide, by over 10%. But what's interesting is typically when you see these indexes go higher, volatility typically goes lower. And since the Russell 2000's been going higher ever since, last August, we're seeing the volatility as measured by the Russell 2000 Volatility Index remain relatively high. I mean, it's now at 30, what you mentioned, it was 35 today. I think it was 35 today. What does that mean? Well, it means that there's an expected 30-day volatility level where market participants are anticipating a plus or minus 2% daily move in the Russell 2000 index. So this is a market segment that is getting a lot of attention because it's been underperforming for a long time relative to the large cap counterparts. But there's some risk that goes with being in the Russell 2000. So this product is great for not only managing your risk exposure, but also harvesting volatility, harvesting, income because of the elevated volatility level relative to, let's say, the VIX. And it's great to have Dr. Vix with us, who can get deep into the weeds on all things volatility. So
he's not quite Dr. Vix yet. He doesn't have the PhD in hand. That's why he is the once and future Dr. Vix, but Mr. Dr. Vix, nonetheless. A lot popping off. I know small cap vol has been on your radar of late as well. It's kind of hard for it not to be. If you watch equity vol and you aren't paying attention to what's going on in the skew and the vol of Russell 2000, you're missing a big part of the picture. What are your thoughts on what's been going on out there from a small cap and indeed an equity vol landscape? A lot lighting it up out there today. And B, if you have any thoughts in terms of expectations or outlook for these mini Russell 2000 options, have at it, sir.
Well, you stole part of what I wanted to say at the very beginning when you threw out there that the timing couldn't be better. And I just know from experience that it's not like an exchange says, hey, let's launch mini RUT options and let's do it next Monday. There's a long process to deciding that you want to do something, going through the regulatory process. So there's a little bit of luck involved in this one. And I really don't think that my buddies over at SIBO could have planned this out any better. I don't really think anybody would have expected the Russell 2000 to be outperforming to the extent that it has so far this year. I'm not saying that small caps were not overdue for somewhat of a rebound, but you definitely that double digit. Last I had checked, I think it was about 12 or 13% outperformance, but just that big outperformance in such a short period of time this year is absolutely amazing. And the thing that keeps having me scratch my head is why is RVX, as elevated as it is relative to VIX? And I'm, that I could sit down with two or three people that do nothing but look at volatility and probably debate it out and never really come up with a good answer on it. I can't fathom that, there are a lot of people that are, stepping up and hedging right now, which would push the put implied volatility up. A part of me just wonders if, people are staying out of the way across the board in volatility. And we've seen it in the term structure of VIX, where the VIX futures remain at a premium relative to spot VIX. I think if we had the RVX futures out there trading, we would be seeing the exact same thing, where there is this, it's not so much a demand for the options, but maybe a skittishness around selling the options or trying to take advantage of the overpricing of options relative to realized volatility. And I know today is a big realized volatility day, but realized volatility has not been keeping pace with what all the volatility indexes are pricing in this year. And so if you've been brave enough and not one of the skittish people that's afraid to take the other side of volatility or get short volatility one way or another, you've actually already been rewarded quite nicely in 2021.
Yeah, you're right. It has been fascinating to watch. I've said it many times on the show that RVX has just been, it's been glued north of 30. We've talked about many times why that might be. We had Matt on not too long ago talking about how he's seen just a huge influx of tiny accounts flocking into these small, literally very small delta calls, 5 delta and others. And we know the VIX calculation takes into account some of that skew, and the massive amount of calls going up in RVX may indeed have something to do with why it just stays glued out there. Speaking of what's going up out there, let's look at really quickly, see what's lighting it up over there at CME this week from a Russell 2000 perspective. Remember, you guys, as always, can generate these reports for yourself completely free. You know where to go, cmegroup.com/TWIFO, TWIFO, or /TWIO, TWIO, This Week in Options. Both of them work. They should get you to this report. Go to the equity section, go to the Russell 2000 drop down, and you're off to the races. A pretty active week out there already. 21,000 contracts on the tape. That's a lot for a Russell 2000 out there. But of course, these numbers have been surging north up late. And for a while there, it used to be all farther out of the money puts, lighting it up farther down the expiration cycle. That was pretty much the norm. In the last few months, it has shifted completely to mostly aggressive out of the money calls. Let's see what's on the tape out here this week. The most action this week coming in the March contract, nearly 30%, 29.5% of the volume this week coming in that March contract that has 21, almost 22 days to go. By the way, out there, the vol, I said the RBX is about 36.5. The vol in this March contract at about 33.11, up 5 points exactly from last week. So the vol out there getting firm, a lot of that on the heels of today's big sell-off out there. Skew-wise, the puts last week, 14.6% rich. This week, they're 16.5% rich. So puts getting bid up. The calls, 11.2% cheap last week. This week, about 11.4% cheap. So not as much action with the calls, but the puts are moving quite a bit. We also start seeing a little bit of a shift in that skew curve, which again, not surprising given today's aggressive move. Take a deep dive into that shift and slide tool there if you haven't in a while, listeners. There's a cool video over there at Bantix explaining how it works, and it's a pretty useful tool. I haven't really seen anything else like it in an analytics package where it not just tells you how much you're moving along the skew curve, but also how much that curve has shifted in one direction or the other. In terms of the most active contract out here this week, it is once again to the calls. Coming into showtime, we were at 2236 in the Russell 2000, listeners, and it's the 23 quarter calls doing nearly 1,000 contracts that have taken the lion's share of the top spot this week, followed hot and heavy by the 2295 calls. These are going up. These are the weeklies in March that have about 8 days to go. These also have done a similar amount of paper. So it is, once again, upside calls that are leading the dance. Actually, you know what? I take that back. There was a flurry of puts in the week 4 March that are going out in 29 days. Looks like they have trumped it now. 1,900 of those going up, or I should say 1,100 of those going up this week of the 1,900 strike. Let's see how many of those. Actually, surprisingly, none today. They were all Monday and Wednesday. I think there'd be a lot of puts going up out there today, but all of that was earlier this week. So it looks like they maybe put them on Monday and then took them off on Wednesday. Maybe a bit of a vertical, actually, a 2,100 1,900 vertical going up on Monday 575 times, and then looks like they took off maybe the 1,900 leg today because it looks like the 2,100s are still open. Either way, interesting stuff afoot here. So it is a lot of upside, but the biggest trade is still to the dark side. Listen, you can probably talk equities and volatility for the rest of the show, but before we roll off at equities, Rick, any other interesting nuggets either with these contracts, or I know you watched the full FTSE Russell complex over there at SIBO. I'm sure they've been putting up crazy numbers of late as well. Any interesting trends or developments you've noted out there you want to share with our audience, sir?
Well, the Russell 2000 listed derivative ecosystem. Let's look at the futures traded at CME, options on the ETF, and cash-settled index options. This ecosystem is seeing considerable growth year over year. On a notional basis, the notional average daily volume is up 64% year over year, which is dramatic. I mean, we're seeing $45 billion notional trade every day. The open interest in the Russell 2000 right now is about 110 billion notional, which is phenomenal. Average daily volume in the Russell 2000 contract is at 45,000, up 31% year over year. If you look at that on a notional basis, it's 9.6 billion. So there's a lot of interest, a lot of growth in the small cap area. It's it's our moment in the sunlight. And I do want to point out, because there is a lot of volatility in the Russell 2000, your listeners may be interested in knowing that the smaller contract is a weeklies contract, which means that they expire at the end of every week, but they also have a Monday expiration, a Wednesday expiration, which is new. So we'll have a Monday, Wednesday, Friday expiration. We'll have end of month, end of quarter. So lots of flexibility in the new contract.
All right, let's keep on rolling. Russell, you've been on the show enough. I don't even have to ask you what you want to talk about next. So without further ado, let's go hang our hats out there in the rates.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody. Rates very much front and center this week. We had Powell talking earlier this week. It seemed like he was placating the market a little bit. Markets seemed like they were liking what he was talking about, but then maybe in the latter sessions, and certainly today, maybe the other side of that coming a little bit to spook some people as yields starting to creep up. The specter potentially of rising rates lurking out there on the horizon as well. And maybe that is what spooked the market today. At the end of the day, more sellers than buyers as far as I'm concerned, listeners. But interesting stuff afoot. Russell, I know you're always bugging us to do more rates on the show. So here you go. Diving right into rates this week. Obviously, a lot lighting it up out there from a rates and a yield and a vol perspective. What is catching your eye out there this week in the land of rates, sir?
The CME FedWatch tool, which I know is not, it's not talking directly about the options on the futures, but it's actually starting to tick up and say that we might get a hike this year. So I think if you start to look out at, and this is an esoteric one, if you look at Eurodollar mid-curve options, I wouldn't be surprised if they've started doing something.
Yeah, I was just going to mention that myself. FedWatch. It's a tool we haven't had a chance to really talk about over there at CME for a while because, quite frankly, not a heck of a lot to talk about. It was pricing in really no probability of anything anywhere for the near future. Where to find that for yourself, listeners. Just type CME and FedWatch into your browser. It's pretty easy to find over there. I'm looking here right now, the next meeting date, April. We're not seeing much out there. The current rate is probably staying the same, but about a 4% chance of taking. I don't think anyone's looking at April. Let's go all the way out to D's, a little bit farther out. Still about a 4.1% chance of a little bit of a hike, which is higher than it was not too long ago. So it's still slight, but it is starting to creep in, the chance of any sort of hike, about a little north of 4%. I'm sure if you go beyond that as well, you're starting to see a little bit more creeping in. It's a lot of data here. You can go historical, everything else. Check it out if you haven't in a while. You probably haven't. FedWatch is an interesting beast again. Speaking of interesting beasts, if data ends in Y, Eurodollars are probably up to something. Let's hang our hat out there. Let's go to interest rates, drop down the TWIFO report, listeners, and go to Eurodollars. I hit select all. Again, be warned. This is the product where that warning probably applies the most. There are more contracts and more strikes and more series to look at out here in Eurodollars. You will scroll for days because there's some paper afoot out here this week. Coming into showtime, Eurodollars putting up 5.7, almost 5.8 million contracts. I mean, there's so much paper out here that analyzing it is almost a fool's errand. It's like trying to look at a hurricane and spotting the individual leaves of a tree that's blowing in the wind. There's just so much that's lighting it up. The spoiler alert out here, Eurodollars are down, vol is up. That's kind of the narrative across the broad spectrum out here. And most of the active contracts are doing, shall we say, a fair bit of paper. The most active contract actually going out to the June contract has 106 days to go out here, has nearly 17% of the paper out here. Let's see. That's where we'll hang our hat from an overall vol perspective. Let's see. Vol out here in the Eurodollars, like I mentioned, the vol advancers were pretty much all in the Eurodollars category this week, and that's why you're seeing big moves out here. This contract that has, like I said, about 108 days to go out here, the June expiration. Rates are typically sleepy. They don't usually have this much volatility change going on out there. Eurodollars is kind of a bit of an exception to that rule, and it is certainly proving it out here this week. Skew-wise in this contract, last week the puts were pretty bid, 7.7%, but they're almost double that this week, a little more than that actually. The 16.2% bid this week, so a hefty bid coming in. Again, not surprising. We're seeing a lot of red on the screen out there too. Not surprising. That's what we're seeing. Calls, 10.7% cheap last week. This week, 15.5% cheap. So the calls coming in, puts getting bid. We're seeing a massive change in that shift and slide, listeners out there, in terms of how much we're seeing shift-wise versus slide. Where we're sliding about 8 points along the curve. Big moves out there. By the way, the vol is actually higher up out here. We're looking at almost a 70, 69, 78 out here, up about 24 points. So you're seeing a lot of vol being baked into this contract. Actually just ticked up again. Now we're at 70, about 70 even. So yeah, that's a heck of a lot of vol to be found out here in a rates product listeners. In terms of the action out here, the number one contract, and does seem to be the 99 quarter puts going out here in June with about 106 days to go. They did a whopping 193,000 contracts this week. So that's more than most of the entire metals complex combined in just that one put out here this week. Let's see where the lion's share of that went up throughout the week. Let's see. The big day was Monday, 121,000 contracts on the tape on Monday. About half of that closing, about 70,000, 60-odd thousand, almost 70,000 of that closing on Monday. Tuesday, about 40,000, also a lot of closing. And then Wednesday, about 23,000 on the tape, a slightly opening. And today, a paltry 9,300 on the tape. So a lot of action there on Monday out here. Again, we could spend the rest of the show looking at what is active out here from a Eurodollar perspective. I'm trying to find any other contracts that are close to that amount of paper. We got the 99 and 7/8 contract going out here. Also in June, that did a little bit less paper. And then we got 99 and 3/4 puts here. These are going out in September, nearly 200 days to go. These did 125,000 contracts this week. So those are the two big dogs out here. Also, 98 and 7/8 puts in March. These only have 15 days to go. These had 152,000 contracts. So again, pick your month, pick your contract, pick your poison out here. There is a lot of paper to parse. Again, we could do a whole show on this and not even do it justice because there is just so much. I mean, talking almost 6 million contract listeners. That's a bear to come to grip with for a lot of our audience. Anything else lighting up your tape out there in rates land, Mr. Once and Future Dr. Vix, or do you want to hang our hat somewhere else?
Well, I just the only thing that you were pointing out that the odds are now only like at 4% for a hike. A week ago, it was only 2%. And I really do think if you've got any concerns whatsoever with respect to inflation, that rates are an area that you're going to want to pay attention to in 2021. What other areas would you want to pay attention to if you're concerned about inflation in 2021? I just took over as host.
Well, some might say you might want to look at metals. And so I think we'll hang our hat there next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, let's get to it. Usually in metals, we talk gold. A lot of times it's been silver of late. That got caught up in all that short squeeze frenzy, which, spoiler alert, is happening again, at least in the games and AMCs of the world. I'm not sure about silver getting caught up. It was kind of a bit of a short squeeze that wasn't out there in silver. But what has been moving a lot of late as well is copper. Copper is our number one to the upside this week, up almost 9.25%. This has kind of been an ongoing story out there of these increasing copper prices. Eric Norland over there at CME did a great research paper. Check it out over there, detailing how this was actually last week. They had already reached an 8-year high in copper prices, despite the fact that people thought the pandemic was going to curtail demand for the near future. Of course, the recovery that's going on over there in China, as well as a retail demand for goods, all that combining to really drive a lot of demand for copper. So check out that research if you haven't already. Eric always does interesting stuff. And let's see, copper not too long ago wasn't that much of an option story. I remember having, I think it was Blue on the show a couple of years ago, and we were trying to make heads or tails of copper, but there really wasn't a lot of options activity to parse. Well, that worm has certainly turned out there. As of this week, 23,300. Again, it's no Eurodollars, but compared to where it was a few years ago, a couple of thousand contracts, this is in orders of magnitude much more busy week out here. So this is a contract that actually does some paper now, which is nice. It's nice to have something else to be able to sink our teeth into out here in the metals. I like the shiny stuff as well, but let's get a little base here on the show this week. We're going on out here. 45% of that action out here in copper this week was in the April contract that has 27, almost 28 days to go. If you're wondering what is copper vol, well, before we even get to, I'll give you the price action. We're at 4.25 right now. That's a pretty lofty level. I'm looking at this chart here that Eric included with his research here. And again, these are levels we haven't seen since 2011 into 2012. Looks like it got a little bit north of 4.5 there. When he put this chart out, we were only at we were still shy of $4. So it's moved quite a bit even in the last week since Eric put this out. We're up 4.25% since just the beginning of this week. So another big run for copper, and obviously up nearly 10% from our show last week. So you're talking about 4.25. The April contract is where we're hanging our hat. The vol out here in copper, again, not historically known to be a high volatility product. It's almost a 40, 36.96, up 6.25 points out here. So this is starting to get pretty rich from an overall vol perspective. Let's look here into the skew. The skew in this April contract, the puts last week, 3.3% cheap. This week, a similar level, about 2.6% cheap. So I haven't seen a huge movement in the puts. Call-wise, a little bit different story. They were 5% rich last week, so people have been bidding up that upside for a while. They were bidding up last week. This week, actually, as we're seeing this move materialize, calls actually coming in a little bit, down to about 3.7% rich. In terms of the most active contract out here this week, it was, the $5 calls. These are still about 75 cents out of the money. These went up here in June, 2,000 times. So close to 10% of the paper out here this week was in these June 5 calls. That's a pretty, shall we say, optimistic strike. Looks like there may be a bit of a fly going on here. Looks like actually today, looks like the 4.5, 5, 5.5 fly went up 1,000 by 2,000 by 1,000 times. So 4.5, 5 with the 5.5 kicker. That's interesting. Again, we're talking by June. So this is obviously someone who's anticipating a bit more upside here to copper, and then of course putting on that 5.5 kicker in case the worst comes to pass and we blow aggressively through that strike. So that's interesting stuff. That's obviously why copper is doing so much paper. We're starting to see that upside fly paper. That's always been the case in gold. Every week we see crazy sizable upside flies. Maybe some of that's starting to transition to copper. Maybe some of these metal traders starting to look at copper yet again, because it is getting a little bit more active, a little bit more volatile, and indeed a little bit more liquid. Mr. Rhodes, do you pay attention to copper at all? Or is this something that's starting to come on your radar now that it's starting to move quite a bit? And if not, any other metals lighting up your tape these days, sir?
No, copper is definitely one that I've always kept an eye on. Unfortunately, I like to look at what the price action is, and then I like to look at what's going on in the options. And historically, or up until recently, because there just wasn't a lot of volume, which you already pointed out, it was hard to get a read on what people may be thinking by looking at the skew. You didn't know if you really wanted to trust it. You can trust it right now. That's for darn sure. And I think theme-wise, it's like you said, you like the shiny stuff. I think everybody likes the shiny stuff, but copper is the one market in this area that can give you some indications as to some other places that you want to be trading. It's definitely going to pick up in price if you're going to see an increase in industrial activity. It's definitely going to pick up in price if there's going to be some sort of reality of inflation in front of us, because silver and gold, they'll trade around and be used as a hedge against inflationary moves. But copper, it can be a hedge, but it's also something that's going to go up in price based on basic economics, based on the basic demand that's going to go up as the economy starts to overheat. So that's why I like copper so much. I'm glad you spent as much time on it as you did today.
Yeah, like you said, I've been hesitant in the past to really recommend trading it or even analyze it because it was hard to take the data points seriously. But now there's enough paper that they can do a 4,000 contract vertical out there, or butterfly, and get it off. The markets are tight enough to get that kind of stuff done. So there's definitely enough paper out there in copper now. So if you're looking for other metals to trade or interested in some more volatile assets out there, copper might be an interesting one to look at. Speaking of volatile assets, we got time for squeeze in one more complex here before your questions. And they don't get much more active these days than what's been going on out there in energy. So let's hang our hat out there next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right. Welcome to the energy segment, listeners. Of course, nat gas was on top of everyone's brains last week. It was just it was the story of the week, especially in these very localized type environments where getting delivery of any type of nat gas was extremely difficult. So we saw localized prices spiraling. We kind of detailed, we didn't really see that on the broad Henry Hub futures and options over there at CME. But in some of those localized areas of Texas, we did see some crazy price spikes. But Mr. Rhodes, I know energy's been an area you like to watch quite a bit, and including WTI and maybe nat gas these days as well. What's lighting up your tape out there from an energy perspective, sir?
It's funny. It's nat gas and copper have been the two markets that I really have been paying an awful lot of attention to. And it's just, the weather anomaly that we're experiencing right now, along with just the disruptions that they had in a very important part of the country with respect to nat gas. The other part of it is I wonder if long term we're going to see some increased natural gas demand, since what a lot of the renewables kind of failed this last time around. So I would be looking at maybe some further out trading in nat gas as well.
Well, let's see if we're seeing that. Let's go on out to the energy drop down. Listeners, choose nat gas from the menu. You'll see a bit of a retreat. We were talking about levels north of the $3 range. Now we're at $2.76 on that front future. That's off 7.5% just this week, and 9.5% since our show last week, listeners. So nat gas is a very volatile contract, and it has proven that yet again over the course of the past couple of weeks. The most active contract, it's also, Russell's mentioning longer term trading. It does seem like nat gas is a very, very front month focused product, at least in the last couple of weeks. And that certainly is the case again this week. 44, almost 45% of all the paper, which is a pretty active week. Let's see, about 470,000 contracts going up in nat gas this week. So this is nothing to sneeze at in terms of volume, and nearly half of that going up in that front April contract that has about 28, almost 29 days to go. So I suppose we'll be hanging our hats there, listeners. The vol out there obviously coming in a bit this week as well. It's off about 7.5 points down to about 33.83 in that April contract. Skew-wise, the puts last week, 2% rich this week. Actually coming in down to about 4.9%, 4.9% cheap. That's a huge swing from 2% bid to 4.9% cheap. But then again, we did see the move that they were pricing in last week. They were bidding them because they thought there's going to be a move to the downside. We did see a pretty aggressive move to the downside, so we're breaking through those strikes. The puts coming in, not exactly surprising out here. The calls last week pretty much unched to the at the money. They were even, about 0.2 of a point rich. This week, 4.4% cheap. So I guess as we're sliding down that skew curve, it's rotating as you might expect. I'm looking at the shift and slide to. Actually, the skew did shift quite a bit this week as well. So that probably also may be accounting for a little bit of that call bid coming in. Now we have an interesting little skew here where the puts are almost 5% cheap. The call's almost 5% bid. So interesting what's going on out here in nat gas. In terms of where that action was, you could probably guess it was on the call side, and it was the 3/4 calls doing 44, almost 45,000 contracts this week. Actually, most of that today, 23,800 of that going up today, 10,000 on Tuesday, 5,200 each on Wednesday and Monday. So obviously we don't know the OI numbers for today. Also, the 3 calls pretty active today as well. We'll get to those in a second though, because it's most like the other most active contract out here on the week. Let's see. Yeah, it looks like it was the 2.5 puts doing 22, almost 23,000 contracts. The lion's share of those on Tuesday, a little bit less than half, 10,000 and change going up on Tuesday, slightly opening. So people opening put strikes on Tuesday. Not exactly surprising. They were probably setting up for this move that had already started taking place by that point. Let's see. Behind that, we have the 4 even calls going up out here in August, actually, that were the next most active. They went up 16,000 times, which is kind of fast. Actually, 19,000 of those in August. And then out here in October, we did another 16,000. So the 4 calls were actually pretty active this week as well, just not in that front April contract. So a lot of paper starting to spread out. Maybe that gets back to what Russell was saying earlier about a little bit longer term paper, perhaps setting up out here let's go a little bit further. Let's go out to, dare I say it, DEES and see what was lighting it up out there. It was the 3.15 put doing only 3,000 contracts. So DEES only did 1.3% of the paper this week. It's all front month all the time out here in nat gas, which is, again, maybe not that surprising given the aggressiveness of the moves, but getting to what Russell was alluding to earlier, you might expect to see some of that paper start to spread a little bit farther out. It seems like we got some paper in August and October going up to the 4 strike. And that's really about it. It's all kind of near term and a little bit closer to home there. 3/4 calls leading the dance. Fascinating stuff. Nat gas is another interesting beast. You know what else is fascinating, listeners? Are your questions. So let's get to them. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, let's get into it. Mr. Rick, sir, we got a question for you here up first. This comes from the creatively named LLT $. And they're going back to what we were talking about with Sean on the show a couple of weeks ago. He says Russell microcaps, those are, of course, the bottom half of the Russell 2000, the bottom 1,000 of the Russell 2000 listeners, have been lighting it up lately. Any chance of options on this sub-index, as he puts it, anytime soon? It's an interesting question, Rick. We were just talking about this with Sean not too long ago about how when you start breaking up the Russell 2000 into some of its component parts, including, as he mentioned, that bottom half of the Russell 2000, that outperformance becomes even more dramatic. So I'm curious for you and all your conversation with the FTSE folks, is this something you guys are considering? What do you have to say here for our friend here, the creatively named LLT $?
Well, I want to thank LLT $, for the question, and I want to thank him for the interest in the Russell Microcap Index. It's a great idea, and right now we've got the Russell 1000, the Russell 1000 Growth, the Russell 1000 Value, and the Russell 2000. And it would be great to add to the family of the Russell product line, but it really does depend on the level of demand. So I encourage you, LLT $, and anyone else that has an interest in this type of product, send me an email, rrosenthal@cbo.com, and I will forward your interest to the team that develops new products. How's that?
It could be a challenge from a branding perspective, too. Obviously, you can't call it the Russell 1000 again because you already have that. So Russell Microcap, though, has a certain ring to it. You have to just explain it's a different 1000 from the other 1000 that are on the upside. But I think there might be something to this LLT $, because certainly people just can't seem to get enough Russell 2000 these days. So if you cut it up and give them more flavors, I got a feeling they may be interested in there. All right, next up, we've got a little bit of love from Dustin. Dustin says, thanks for breaking down the skew reports last week. Fascinating info. Well, you're welcome, Dustin. I think that was long overdue. We've had so many new listeners to the show just in the last few months, and it's been a while since we've broken down how these reports actually work. If you missed it, listeners, check out the show last week. We kind of did a breakdown column by column of how these TWIFO reports work, what all these different data points mean. If you just look at it for the first time, God forbid you start in Eurodollars or select all, it will be completely overwhelming. So look at some of these reports, cmegroup.com/TWIFO. Pick your product you're interested in, and then follow along with that show last week. We'll explain column by column what each of those mean. Again, it's pretty interesting stuff if you're even remotely interested in trading or just even watching how these products perform out here. That report will be very handy for you. Next up, Russell, we got Zach. Zach is asking the omnipresent question, the question that flummoxes researchers and analysts and traders all the time out here. He wants to know, why do some active futures products trade such little options volume? Again, Russell, this is the perennial question. I will put it to you, the Once a Future Dr. Bix. You are now obligated to come up with the answer. So what do you have to say here for Zach?
Did he give an example of a market?
He did not. That would be too easy.
Oh man,
that's too fun.
No, he's making it way too easy. Well, I did look at that before I joined EQ Derivatives when I was at TAB, and I did a little bit more market structure type work. It was interesting how there are certain markets that trade a ton of options and a bunch that don't. Part of it has to do with volatility. Just you do want to have some sort of volatility. The other part of it, and this is probably, I probably should flip them and say this is a main one. You got to think, especially in the commodity space or any broad-based future space, what kind of entities are out there that need to manage their risk? And when you have a market that you have, like gold, for instance, this is the one that I use in the classroom a lot. If it's August and you're Tiffany's or Zales or somebody like that, and you take delivery of a ton of gold every year in November before the Christmas season, you're always going to be coming in and buying calls and worried about and hedging yourself against any kind of big spike in the gold price so that you can still sell crap around Christmas time. Other side of that is you've got gold miners that will not, they'll start churning a loss if they're pulling stuff out of the ground and the price goes down a bunch. So you have, an entity that's a natural buyer of puts. That holds true for most of the physical commodities. It's not necessarily true for all of the different financial futures. And I think that's why you see this big divergence in the relative option activity for different markets.
Well said, sir. Next up, we've got Alex. Alex V wants to know, what's up with copper options? Well, hopefully you're listening to the show today, Alex V, because we just did a whole rundown of all things copper options. Check it out. You guys can always, of course, do it yourselves in between the episodes. CMEgroup.com/TWIFO. Choose the metals section, then choose copper. Remember, not the precious. Got to go to the base for the copper stuff, and then choose it there, and you'll be off to the races. All right, everybody. Unfortunately, that music means we're coming to the end of our journey here. Amazing how fast an hour flies by when you're talking all things futures options. But before we go, let's go back around the horn. Rick, you did an able job filling in for Mr. Smith over there on the FTSE Russell hot seat. Are there any nuggets or hints? Or maybe you want to give our audience one last tease of what to look forward to next week, sir. Now is the time. The floor is yours.
Well, thank you very much. And I want to thank you again for having me. Mark, I know you have a sophisticated audience, and I just wanted to point out that we think that options education is really important. And we have the Options Institute that is doing a wonderful job providing blogs. We've got a bi-weekly Inside Volatility newsletter that's fantastic, available to your readers or anybody at no cost. Just sign up for it. We have a series of webinars that offer trading ideas and ideas on how to use options for hedging. So I would encourage anybody that has an interest in learning more about how to use options, go to CBOE.com and check out our Options Institute and blogs and sign up for the Inside Volatility newsletter. And see you on March 1st. Trade that MRUT and look forward to future the next time we're together and we can talk about all the activity we're seeing in the Russell 2000 options at CBOE.
There you go. Check them out. The Options Institute is a unique resource. Not many exchanges left doing the whole education things. Options Institute, certainly one to check out. And of course, if you're intrigued by all things FTSE Russell, you know where to go. FTSERussell.com is the place to go for all the data, the analysis they're doing on the micro caps. You like micro caps? That's all there. The small caps, large caps, you name it. It's all there, FTSERussell.com. Give him a follow on the old Twitters while you're at it, at FTSE Russell. And Mr. Rhodes, I know you know a thing or two about the Options Institute, but what are you cooking up over there that may interest our audience and our listeners, sir? Maybe you got a book or two you want to tell them about.
I've got a recent VIX handbook out and that people can look up, which is off topic with respect to today's program. But the VIX Trader's Handbook came out a little while ago. It does talk about how to use skew a little bit when you're trading some of the macro markets. I do want to mirror, and as an Options Institute alumni, they still do absolutely wonderful work over there. So I want to mirror Rick's sentiments with respect to the OI. And then finally, I didn't get to chime in like I wanted to, but I think that the bottom half of the Russell 2000 should be called the Little Russell.
Yes, you probably would. Check him out, listeners. You know where to find him. Russell, and then Rhoads. He spells it his own funky way, RHOADS. Look him up on the old Amazons if you want a book or two on all things volatility over there. You know where to go to get all this data we're talking about here today and a whole bunch more. CMEgroup.com/TWIFO/TWIO also works. You get all these reports, all this data. I'm talking about the whole freaking hour long, all completely for free, and it's all live all week. So you can do it at 2 a.m. on Thursday if you are so inclined, or Monday, or whatever day floats your boat. So active on the weekends as well. You know where to go. And of course, the Fed Watch starting to light up there as well. So check out all that stuff. CMEgroup.com is the place to go. On behalf of everybody over there at CME, and of course, Sean, everybody over there at FTSE Land, and of course, Mr. Rick and Mr. Russell, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions. Keep them coming. And we'll see you back here tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. I got a feeling there's a little bit of vol we're going to be talking about tomorrow. And then, of course, back again next week with another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEgroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.